Adaptability, in my opinion, is what makes a difference between a good media buyer and a great media buyer. And it's how you respond to things that don't work.
Hello, everyone. Welcome to today's webinar. DNA presenting Sailing Through Advertising Waves. We've worked on over 350 equity crowdfunding campaigns, targeting investors, a premium audience, difficult for media buyers. I've worked on hundreds of campaigns outside of that, particularly with groups that have raised with us and are going towards their marketing growth milestones. And advertising has been a very scalable traffic source for us. It's not as easy as following a list in terms of what to set up. There are variables, there are rough waters to navigate on every one of these initiatives. And I am joined here by Nikki Chung, who works on all of our advertising campaigns today, overseeing the performance, as well as Jeanette Cornish, campaign strategist, account manager with some of the top issuers in the world of Reg CF. Excited to go in depth with you today.
Hey, Jason, thank you so much. Excited to be here. As Jason was saying, I'm an account manager here at DNA, worked on tons of equity crowdfunding campaigns, and definitely understand the scope of rough waters that it can entail sometimes. So excited to jump in and talk about it.
Yeah, likewise here. I'm Nikki, media buyer here at DNA. And, I've worked, like Jason, I worked side by side with Jason, Jeanette, over hundreds of equity crowdfunding campaigns. So it could be rough sometimes, but we're here to guide you through these rough waters and tell you what to look out for and how you can get your crowdfunding to success.
It looks like both of you guys are actually boating today with your backgrounds. So appreciate you taking the time to hop on. I'm stuck in a hotel room myself, but looking forward to today's presentation. Audience, thanks for taking the time to join us today. We put together a slideshow presentation every month. Brendan, our creative director, alongside Khalil, our head of content marketing, who you may recognize from past webinars, put the time, effort, energy into the creation of all of these documents. So you can see the media, the waves, and the shadows of an individual looking at how to run an advertising campaign here. You've heard our backgrounds. When asked about investor marketing, any type of advertising for that matter, it's usually a performance question. What can we do to drive traffic from the right audiences to our offering and get conversions, get actual results? Not interested in clicks, don't care about any type of view metrics. Show me my performance, return on ad spend, cost per acquisition of each investor, each audience. That is the world we live in working with startups, and rightfully so. One campaign has to produce strong enough performance to validate the need for the next. Nikki, why is this an important discussion, and why did we choose the words setting sail to describe this process?
Yeah, so a lot of what you do for equity crowdfunding, you have to prepare in advance for everything, right? We can't say, oh, we're going to run ads on the first day and by tomorrow expect, money coming into your bank account. It doesn't usually work that way. You do need a strategy. You do need the whole 9 yards before you start your crowdfunding campaign. And ads itself, especially if you're running Facebook ads, does take time to optimize. There is machine learning on the back end, and you want to give at least 2 to 3 weeks for the ads to optimize. You need to be spending a good amount of money to really get that data in. And a lot of times when you're doing media buying, people who are starters don't understand that when you are doing media buying, when you're buying ads on Facebook, you're not only buying, placement on Facebook, you're not only showing your ad, but you're also buying that data so you understand what your audience resonates with your brand, so you can build off of that and continue to create assets that work for your audience.
Exactly. Jeanette, does that encapsulate the discussion you have with clients, that navigating the seas as it comes to performance for advertising for these initiatives?
Yeah, definitely. I was going to say it's a marathon, not a sprint, but in this case, we're going on a journey, we're sailing. So as Nikki was saying, some people don't really want to hear about the data, the clicks, they just want to go directly to the conversions. But it is a long game. Strategy is important, understanding your messaging, understanding what's resonating to get those clicks, to have strong front end metrics, to really know what to lean into when stuff starts converting. So, setting sail is definitely a great way to set the tone when it comes to your marketing and advertising strategy, because you definitely have to prepare for that full journey and the ebbs and flows of what that entails.
Absolutely. And let's say we're sailing from the East Coast to Europe. If we're 2 millimeters off in our map, in our direction, we could end up at a completely different location, different continent at that. Throw in account the variables, everything about the tides, the weather, our environment, and suddenly that plan becomes further and further and further off course. So being able to understand that journey, understand that the crowd is a living, breathing entity full of thousands, in some cases, millions of individuals. It's at best a wave with highs and lows. And finding the different aspects of a campaign takes time, and patience is key. Whether we're talking about the channels that we're operating within, whether it's paid advertising or organic content marketing. Paid advertising is scalable, so we want to be able to focus here. Whether you have an organic audience or not, whether you have relationships that hold an organic audience or not, you can buy ads and reach the right individuals and take them to your offerings. We want to focus on ads. Beyond the channel, it's the audience, it's the messaging, and it's the funnel that you're taking them down. And you can control these pieces. You can't control what they do when they get there, but you can manage these pieces, and therefore we believe you can manage them to a point of effectiveness. You can see it, you can touch it, you can move it, you can manage it, you can continue managing it until it is physically working. But patience is key. If you set it up one day and say, hey, someone told me these things were supposed to perform, at a 10x return. I've been running for a week. I've spent $1,000. I've spent $10,000. I've received nothing in return. This stuff doesn't work. That Mark Zuckerberg is full of it. I'm shutting it off. Ads didn't work for me. Everyone else, but not me. It's just going to be a loss. You have to anticipate that there's a sales cycle. An investor today may not convert for 3 weeks. If you shut their retargeting, their creative, their audience off too early, it could drastically affect your performance. There's no instant success here, and you have to be able to look at what is working within the algorithm, what parts of the journey are performing, so that you can see it fully land at the end.
Absolutely.
Yeah,
Go ahead, Jeanette. Sorry.
we're both eager to jump on it, but yes, I definitely agree. Patience is key. I would say that different campaigns, you definitely look for success in the beginning and the end, and it's really that kind of middle that can sometimes have that lull. But either way, it's really trying to find that messaging, working through your different funnels, working on your organic content that really makes it all work together. So yeah, definitely patience is key.
Yeah, and to add on to that, some of the best crowdfunding campaigns I've worked on raised, millions of dollars, do really have highs and lows. Like, it's not always going to be high. It's not always going to be like, oh, it's smooth sailing all the way to the end, right? I've had campaigns that were stuck for months, maybe 2 months, not raising enough money, and then really still sticking with it, being persistent and consistent with the ads and testing different things, and then eventually finding something that works. And in the meantime, when things weren't working, they're still talking to people, still running ads to their audience, building that retargeting audience as well. And towards the end, it's always going to be huge, huge close. As long as you're consistent with it and you're persistent, you're always scaling, you're always optimizing, always testing different things. I think you're always going to be, on the right track.
Sure. And we're getting questions. I'm not going to answer all of them and won't be able to all the way through, but there's one around tracking. due to privacy laws, Google and Facebook are becoming more hit or miss, hence more expensive. There are huge holes in data analytics. How do you mitigate this? And the first thing I have to point out is there's always been holes in analytics well before iOS 14.5 and later updates over the past 2 years. It's always been a gray area, and it's always taken a bit of storytelling to be able to decipher what the direct category in Google Analytics means and what the other category means and where traffic is actually coming from. And when I'm looking at analytics, I'm trying to put together a puzzle with missing pieces at all times, even if I'm looking at web channels where those holes are not as strong. Mobile, iOS, is a massive obstacle. So I'm not into analytics for any vanity purposes. We don't get a trophy from our clients if we get a 10x return on advertising spend. We certainly don't get, anything along those lines as much as something that tells us what to do next. So if Facebook advertising is a primary source of traffic, and I'm seeing a 2.2x return on advertising spend that week, it's not great. Pixel data, in the wrong discussion, someone would shut off that advertising. I would scale into it, and I'll explain why. We track less than 30% of conversions on Facebook. That takes into account the 5% of mobile users that tell Facebook, yes, track me, go right ahead. I trust you, Facebook, as well as Android users, desktop users, averaging at about 30%. I want to look at mid-funnel conversions. I want to look at add to cart. I want to look at initiate checkout, page view to see what the discrepancies are from the events manager to the actual pixel tracking. And the events manager will show you the traffic. They'll show you the conversions. And I want to ask myself, where else could that traffic be coming from? Then I'll run a test. Advertising is a series of tests. If I'm able to run, call it twice the amount of ads the following week, twice the amount on the daily pacing for a week, and see twice the amount of conversions, hey, I not only on the pixel data, but on the total campaign, I have something there. And I could probably continue to do the same thing the next week. I'm shooting a bit more in the dark, but at the same time, I'm finding traffic sources that are performing. And we do have to report on the pixel data as well as the total campaign. How much as a whole was spent in a given week? How much was then raised that given week? Where are the variables? Where are the different traffic sources? What's actually coming from where? And sure, maybe you got an email out from the issuer's email account or the portal's account or finance or email newsletter, but is it scalable? Is it consistent? Is it repeatable? Advertising has been that source for us, so we have to find a way to make it work. Nikki, do you want to add anything on that in terms of holes in data analytics and how you've seen campaigns that if you were working just on pixel data, you may not have scaled, but by doing so, you were able to run one of the top campaigns in the industry?
Absolutely. Actually, what you said earlier about, seeing a 2.2x pixel ROAS is actually not impressive. And by a lot of media buying standards, especially if you're in the middle of your campaign, it's not a good return at all. For us, we won't be hitting about 3 to 5x, but yeah, like going back to the 2.2 pixel ROAS, it's not good at all. But like Jason said, I agree with him. I would scale into that, right? Pixel only tracks about 30%. We always compare and look at the campaign as a whole. If you're running ads and you're seeing the ads only track, let's say, 5 conversions this week, 5 investors, but on your back end, you're seeing maybe 15 investors, right? You want to be able to take into account whether or not these came from ads. Maybe you had some personal connections that invested, but if you're not running other sources of traffic and advertising is really the majority of your traffic, then most of the time you can manually attribute these conversions to advertising and be able to make better media buying decisions that way and be able to scale. And personally, if we're only seeing, like, let's say, like same example, 5 conversions, I would scale the ones that did track conversions just because we have that data, and Facebook, and most importantly, has that data and they can work off of it.
Yeah, I definitely agree. And I like what you said earlier, Jason, about how it's basically a puzzle And even though there are some holes, you're putting together that bigger picture. So really understanding the whole back end, understanding, okay, we brought in so many new investors for the week, but how many were from ads, what type of ads, and really filling in the blanks to understand where to lean into. Whereas, you know, once you kind of fill in those blanks, you feel more confident leaning into that 2.2 ROAS because you understand the bigger picture. So
Yeah.
definitely agree.
And, you know, for me, I try to put myself in the founder's shoes and ask, what else are you going to do? You likely need 50,000 visitors to your offering page per every $1 million raised. That's based on some conservative metrics of a 2% conversion rate. Google says an average across the web is 2.35%. So 2% on an investment campaign is solid. 1% can be very effective, and $1,000 average investment value. So 50,000 visitors, 1,000 investors, $1,000 average each, $1 million raised. Maybe on a Reg A campaign, that's 2.2 million based on a $2,200 average investment. You know, we see 3 million produced from 50,000 visitors on some of our campaigns. I've seen a lot more on Reg D and higher transactional values, but the idea is you need a whole lot of traffic. You don't want to slow down your ad campaigns. I've worked on campaigns that, you know, have done 2.5 million, 3.8 million, 4.2 million. And I've asked, hey, what will we have needed to do to hit the 5, given the client had a short time period, but we could have done more. And it's usually somewhere where we slowed down the ads or didn't scale them quick enough. And I like to point out these stories because clients we work with generally want to maximize what they can do. You know, I can give you a 30x return on ad spend, spending $100 and raising 3,000 and only going after people who have been to the actual checkout stages of the investment. But ROAS, can return on ad spend, could be a fooling metric for that reason. Nikki, tell me more about the sales cycle.
Yeah, of course. So the sales cycle is kind of interesting when it comes to equity crowdfunding. It's not what you see with normal customer acquisition like e-commerce, where it only takes several touch points for them to convert, right? A lot of equity crowdfunding takes a while to convert, meaning it takes 7 to 17 touch points. They have to see your ads, your posts, maybe even your emails 7 to 17 times in total before they actually convert. And this is because most investors take their time to really gauge momentum. They want to do their own research in your market, maybe in your company, and they also want to do, you know, like a lot of they want to look at the momentum, see if you guys are really building off what you guys have, and that's very important for investors. And usually we see momentum ads that talk about milestones, about what you're doing, third-party validation. Those tend to work a lot better. And I'm not surprised because, you know, investors love to hop in when there's a lot of momentum. They love to invest in a company that's doing a lot. Rushing here can lead to suboptimal results. So when it comes to ads, we need time to optimize. We need ample time to get those, what do you call it? Get that data uh, in order to make good media buying decisions, right? If we have a smaller data set, we can't, you know, definitively say, oh, this creative's not working or this one is working, right? We want to give it time. We can't just give up on ads a week in and say these aren't going to work. Let's do something completely different, right? So you want to stick with it, give it a good test, work off what's working. And if you're seeing an ad that's getting more clicks than others, that ad is more likely to work. A variation of that ad actually is more likely to work in the future versus the ads that aren't working. So it's always important to build off of that. If you don't have conversions, look at your clicks, look at your click-through rates, work off of the lower tier metrics.
Yeah, that's all correct. And I definitely think that, you know, giving it time is important. I was going to say, as far as your retargeting audience, that is very important. I think we touched on it earlier where people might get discouraged. They're not seeing conversions or investments coming in. But as you're saying, it really does take those 7 to 17 touch points to nurture that retargeting audience. So maybe there's a week where you're not really seeing those conversions, but people are still seeing those retargeting ads. People are still seeing these new creatives. People are still watching clicking even and still going to your raise page because they're interested, but they just kind of haven't tipped over yet to become a full investor. So it's definitely about time, and it's continuing to test. At the same time, it's still networking. It's still, giving company updates, milestones, speaking engagements, things like that, that really get people excited to, invest in an up and coming company that's really showing promise.
Couldn't agree more. And I know it takes me 17 touch points to remember to buy something on Amazon, let alone invest. And, we say that not just to get audiences to, not just to get founders and media buyers to look for a longer time window, but to be in thought around what ads to run to which audiences at which point in the funnel. And there are event tags beyond just purchase. You can have specific ads running to audiences at each different stage. And the more customized, the more personalized your advertising can feel, the stronger the conversion rate can be. And oftentimes, if an ad campaign's not performing, it's really not performing yet. And showcasing more momentum, more social proof, more third-party validation, creating that crowd effect halo around your campaign and having that featured in the ads themselves can bring those audiences that are, 4 touch points in, 16 touch points in to the point of conversion. And it's important to chart out your marketing course here. So you can't growth hack until you have a growth model. I've been part of growth hacking competitions and fireside chats, panels for years. And that's how I start out my perspective on this. The growth model provides the roadmap for success. You're putting the actual metrics in there. And a lot of the times they include that funnel and the awareness that you need to have traffic, to have social page signups, email signups, to then have that audience invest and a conversion rate at each stage of that funnel all the way down. You track every step, impressions, clicks, conversions, understand what your budget buys and adjust accordingly. And you don't just stare at that bottom line. If the returns aren't there, it's probably a shortcoming up here. The conversion rate is the most important metric because that largely dictates how much traffic you drive there and how many conversions you're going to get out of it. And it's the toughest thing to change, to optimize, to pivot. If you polished everything out above, from the audiences to the messaging, you want to look at conversion rate optimization. Maybe have a mid-funnel conversion, a webinar sign up, a lead page, something that's easier to get somebody to say yes to. And that way, once they've said a few yeses, they're statistically more likely to say yes to your ultimate question of, do you want to invest? Do you want to invest again? Do you want to share with everyone you know to invest? And later stages of the funnel.
Yeah, and to add on to that, I really love that bullet point number 2, tracking every step and analyzing every step of the way, especially your advertising funnel. You want to track your clicks, your impressions, and if your ads are getting clicks, but let's say you're seeing that people on your landing page aren't investing, or if they're not even clicking the invest now, that's something, it tells a story. Without having you talk to every person that clicks on your website, right? It'll tell a story. It might be saying people are interested in your ad. It might be an attractive ad, but your landing page isn't quite there. It's not quite what investors are looking for. So that's something you want to look to change, right? If it's something deeper into the funnel, maybe people are clicking invest and they're just not going through with it, then maybe you just need to run more retargeting, get those touch points in, remind them that they started their investment. They can always complete it at this time. And just really looking at that marketing funnel, looking at the story, and the data doesn't lie, so you want to look at the data and analyze it.
Exactly. Yeah, I definitely think that it's important to analyze clicks, impressions, because it can be something with the messaging. It can be your offering page, your campaign video, even where people drop off. I've even seen some at the checkout side where, maybe they're going through 10 different checkout questions. Maybe it's about simplifying that and making it 3, and then you find more people, actually making the full investment. So yeah, I think it's important to understand each step and, go back and adjust and be willing to adjust. Some people are kind of like, this is going to work and this is it. But, you really have to be open to pivoting, testing new things, and backtracking a little bit until you get it right.
Absolutely. And we haven't even gotten to changes yet. So all of this is around casting off, crafting a winning crowdfunding strategy. Once you actually hit the goals, they're difficult to maintain. We've had Reg A clients and live for the full course of their filing, 12 months. And as Nikki said, there's highs and lows. And as Jeanette's saying, you have to look at the metrics all the way through to determine how to get the campaign back up again. And just because you're a leader in the space, number 1, top 10 campaign, that doesn't mean you will be the next week. So Jeanette, how do you set realistic goals and budgets when you're working with the client, and especially when they come to the table saying, "Hey, we want to raise 5 million in 2 to 3 months. Maybe it's 1.235 million. Before we have to do a more in-depth audit." How can you set numbers that are obtainable?
Yeah, I mean, I think it's looking at the industry as a whole, right? You want to see exactly what's going on. So I think it's important to be transparent about the industry and really what's going on. But other than that, you know, here it's saying historical campaign performance. So understanding the industry, and just kind of setting that tone for the journey. We definitely look to hit anywhere from a 3x. I've worked on campaigns where we see 100x sometimes. So it definitely is important to have a strong foundation. Working with clients to really understand their messaging, understand their strong points, understand what we can use to really resonate with future investors. And then, setting that tone of, are you ready for this journey? Are you ready to set sail? Because as soon as we turn on ads, it's not necessarily going to catapult to success. And it's still understanding that we have to test messaging, we have to test audiences. As we mentioned, it's 7 to 17 touch points. So we really have to work on our retargeting ads. And we can get there, but you just have to be open to that journey.
Yeah, Jen, I love what you said about in the beginning about looking at industry averages to set expectations. And to add on to that, based on, when I run ads, I usually see about $150 to $250 cost per acquisition. So that's per investor paying about 150 to 250. So setting that minimum investment and making sure that on average you're getting a good return on ad spend is very important. You ideally, when you do campaigns that are lower minimums, it's going to be a little more difficult to get a positive return on ad spend, just because 150 to 250 is not cheap. So usually I like seeing campaigns have like $300 to $500 minimums. And then as for the return on ad spend, we really want to be aiming for a minimum 3x to 5x. If a campaign isn't consistently 3x over 2-3 weeks, it is a little more difficult to scale, especially if the overall campaign isn't moving that quickly. It's like stuck at like a 1.5x, 2x. It's like a middle ground. That's just telling me, we're almost there. From a spot like that, doing a 2x consistently, 2.5x maybe, I would continue to keep testing. Whenever you're at 2.5x, it's telling me that you're almost there. Your audience does like what you have. I would just push more on, your business revenue, business momentum, raise momentum as well. I think that's always good to talk about, and just run those as ads and make sure people are getting your updates, and they're gonna, they're more likely to act off of what you have if your campaign is moving along. So just make sure to read that data. When it comes to Facebook ads, they give you a lot of data to work off of. So it's important to, make better meet buying decisions off of that data.
Yeah. And as you were mentioning earlier, Nikki, 2.5x, that's an average across every ad set, each with a different audience, as well as every creative, every day and time of week, every device, every age. There's targeting that we can make and view performance of. So 2.5x tells me, unless every audience is performing at 2.5x, that there are likely ad sets within that are much higher. So these are great points that Jeanette and Nikki are bringing out here. Definitely things I recommend for everyone to look at within their campaigns, and continue to optimize, to continue to get it to a good point. Clients are always looking to scale, but it's a matter of seeing some level of performance here to then be able to ramp up. So budgeting and scaling strategies, optimal messaging is the green light, but scaling is the engine. So once we're getting the right response from the right audience at the right time, we can do more of what's working systematically with advertising, and realizing that higher goals require increased ad spend. Success stories emerge from those who weathered the storm. So we've had plenty of campaigns that 3 weeks in saw little to no performance. In fact, if you're getting investments, conversions in the first week of your campaign, first month, it's a good sign. That means that more are to come as you get further along that sales process. That means we can optimize towards what's working. So we've had a few conversions, could be a fluke. We get a few more from those same audiences. We can do more of that. And once you get it to a point of effectiveness, you can scale it. And that's what we're talking about here. Those campaigns that saw no performance 3 weeks, 4 weeks in, may have shut off. It's definitely a CFO response. It's nothing against CFOs. It's just common sense. Expenses, advertising, no return. We only have so much money. We want to stop that. Why are we continuing doing that? But looking at it from a lens of 3 months or longer and continuing to optimize. It's not working. Cool. We're going to change different audiences. We're going to change different messaging. We're going to change the call to action. Let's add some more proof in there. We've had campaigns at 6 weeks, 8 weeks in, surpassed all the performance benchmark goals. Nikki was talking about $150, $250 cost per acquisitions on the pixel data. When we were tracking more years back, we have case studies with $20, $30 cost per acquisition goals. We have campaigns that Jeanette was saying, when we're looking at the whole campaign, are 50x, 100x, and for consistent weeks at a time. And some of our top issuers have mentioned on our podcast, hey, 2 months in, 3 months in, we weren't sure whether we were going to continue crowdfunding. We were stuck at 80K. We were stuck at 150. We then had a lull at 360 and we stayed there. And then look at us in the 7 figures now. Look at our next campaign in the 7 figures. I would commit to this path. You don't want to turn back around in our hypothetical sail back to the East Coast on the way to Europe. You want to get out there. You want to be able to tell the tale. And, I would not stop things now. I would not stop the momentum as much as find a way to get it to work. And that's what the team's trained to do here. Any consultants that you get, any, experts in terms of marketing, it's about how to problem solve versus just address the problem and say that it has not done anything.
Yeah, definitely. I've worked on some top campaigns that, closed in this past year, and everybody's like, wow, they're so successful. And they come on board like, I want to be just like them, but I only have 1 month. And it's like, well, they definitely stayed on longer than 1 month. And maybe at 3 months, they were like, hey, we're at a lull. What's going on? We're thinking about closing. But they weathered the storm and ended up being some of the top campaigns. So I definitely, it is a confirmed thing that staying and weathering the storm, proves to be successful. definitely changing the messaging and optimizing to get to a good point is the best thing to do before scaling. You don't want to just scale blindly. You want to really look at that data, as both you and Nikki were saying. So definitely weather the storm.
Yeah, exactly. And to add on to that real quickly, a lot of people who I talk to when they do equity crowdfunding, they're like, oh, I want to raise like 5 million, but I only have like $100,000 or like even less. Very commonly, they're like $50,000 of ad spend. Well, you know, if you do the math, you're looking for like, I'm not really good at math, but it's probably like 100, whatever, 100, $1,000, or that whatever it is of return on ad spend. That's not very, you know, realistic, right? You want to plan realistically. If you're planning to raise like a million, you want to look for at least 200, 300K. If we're projecting to be at least a 3x return on ad spend. If you want to raise like 3 million, you want to have a million just to spend on advertising, that'll give you 3x return. So just be realistic with budget.
You can do cash disbursements, but you have to have enough at the beginning to really get enough traffic there. Here are some projections for an unnamed campaign around how much they could raise on their CF. This was full cap. So shows some different ad spends, just walking through a scenario for month one, spending 40K, producing 1.5 million impressions. That's based on a $26 CPM. Some of our campaigns are $30 CPM, some are 20. If you're not looking at CPMs, you're not really buying media. It's not the most exciting metric for a CEO who's just looking at the performance, but if you're buying at a $15 CPM versus a $45 CPM and getting the same conversion rate, you're getting a third of the acquisition cost. That's a $50 CPA versus $150. Your CPMs go up out of nowhere. Your return on ad spend is going to go down. Your cost per acquisition is going to go up. This is where you should have eyes. And this is an average between all your other audiences. Cost per click, $2.30. This is actually based on a campaign, and we shoot for more of a dollar cost per click, $2, but they were getting strong enough performance to validate all of this. So landing page conversion rate, the amount of conversions, cost per acquisition, not great. Meanwhile, that's all that we were tracking, and we were the primary source of traffic. Then seeing another 50% of investments coming from organic. We call it referral press content. Client indicated that it was likely from advertising based on the fact that we were the dominant source of traffic, and the cumulative investment being a little over 4x. Nothing substantial, but you could see how it increased and increased and increased. I'm happy to say for this campaign, we've projected low and seen stronger returns every month that you see listed here exponentially. Maybe not exponentially for September, but beyond that for September already. So these are the type of metrics that we're putting into campaigns. This shows an 8.12x, 137 campaign-wide CPA, and the other thing is that this is 20 to 50% coming from ads. That's what we typically see on these campaigns, but you can see how these things scale and move. And if there's a down month, we quickly have to change things up so that we're back on path for the next.
Right. So I actually came up with these projections. So I actually know exactly what's going on here. I also ran this campaign. So just want to add some additional context and insight to this campaign. Jason did mention that the cost per acquisition looks quite high. It's $460, $500 in the middle. They're actually minimum. They're actually seeing about $1,000 per investment. So these numbers are all very profitable. And again, these are all just pixel.
That's the investment value.
Right.
Yeah.
Right. Yeah. Not cost. Yeah. Sorry about that. Yeah. They're seeing $1,000 per investment. So Yeah, these are all conservative numbers. These are all numbers that are pulled directly from the pixel. I didn't want to give, overestimate to the client and say, oh, you're gonna get a lot more in this. So I just gave a more conservative estimate just to see what they can expect throughout October. Did these in July. Something important to note is that what we see from paid social as compared to organic, it's about 50-50 split. A lot of times you should not be surprised if organic produces more than paid social. And a lot of that comes from paid social not tracking all the way through. If like their touch point 10, right? And maybe they bookmarked your page and came back later, but they saw your ad first as a first touch. That's attributed to more organic. We can't see that on the ads. It's not attributed to the pixel a lot of times. Or if they, sign up for an email from an ad and they invested later through an email, that's usually not going to be tracked all the way through from the pixel. A lot of times we say, okay, that's organic, right? So that's still technically from ads, but a lot of times we can't see it. So we don't say, oh, it's from ads. But yeah, want to make sure that, we're making that clear that a lot of these, even though it's organic, likely do come from ads.
Hoisting the sails, creative marketing approaches. Jeanette, what are some ways we like to explore creative advertising techniques?
We love to explore creative advertising techniques. So there's different channels. There are different, I guess, graphics, videos that really resonate with audiences. So it's important to, relay that to your client. See if they're comfortable doing some sort of video style selfies, talking about their raise. We find that really, drives a lot of clicks, a lot of traffic. People want to see the face behind the brand. So really understanding, not only the target key performance indicators, but what ads will really get us there. And just continue to optimize off of that. So, if maybe the selfie video isn't working, maybe pivot and do some sort of milestone with, what they've raised to date or how many investors they have on board. And then continuously switch it up from there. I think for us, we look to do maybe new creatives every week, whether that's 1 to 2 throughout the campaign. We definitely have a strategy with what we start with and then what we continue to work off from there. So, just really gravitating and having those conversations with the client to collaborate on these different styles.
Right. And to add on to that, we always want to be testing different creatives, testing different messaging. We can't always be testing the same thing, expect different results, right? If your campaign is not profitable, you want to try something new and try to grab those investors' attention by doing different creatives, different copy, and really strive to optimize an ad that captivates and converts.
Run ads that are native to a platform. Analyze your competitors. I think we talked about King's Crowd a bit and being able to see the top campaigns that are live and actually researching what they have running on Facebook ad library, going into platforms like SpyFu and seeing what they're running on Google. You should really do a full competitor marketing audit. Look at where they're showing up on Google News, who's talking about them on social, what they're sending out as email marketing newsletter, what updates are being driven on their offering page. Your ad, your content's going to show up next to theirs. So analyze your competitors' industry trends to see what's working. Use selfie videos speaking directly to your prospective investor. These days, less about high production value, more about that native feel. You're reaching people on Instagram, Facebook, next to their friends, family, influencers and content creators that they feel like they know individually. Your content should feel something similar to that. Show who's leading the company, create that one-on-one connection, make it feel like you are talking to them. They know who you are. They have a similar sense. Nothing beats in person and that person-to-person handshake and eye contact. Meanwhile, you're bringing on 1,000 investors per $1 million. You're likely going to need 50,000 visitors per 1,000 investors. As mentioned, digital allows for scale. Digital should be as close to a real experience as possible. Could even be better. You're able to show things that you may not be able to do at a networking event. You could show the product. You could show people using it. You could show all the great people who are referring to it and speaking highly of it, all in your advertisement itself. So we now want to shift to adapting to changing tides, staying agile in marketing. Month one of your campaign may work. Statistically, it takes a few months, but it may, maybe you're in a private setting and you go public. But keeping that momentum up, we'll often see these campaigns on WeFunder and platforms have these private settings, have a huge first public week and then completely halt. You got to stay agile in your marketing and keep it running. What are some examples? How do we stay flexible in strategy?
Yeah, so a lot of times things don't work as planned. And I would say most of the time marketing doesn't really work as you plan. Things change. Something you think is very good ends up not working. And really adaptability, in my opinion, is what makes a difference between a good media buyer and a great media buyer. And it's how you respond to things that don't work. So for example, if you have this great creative, and a lot of times this applies to me as well. I think this creative is great. I think it's going to work. And doesn't get me any return. The clicks are mediocre. Data is just not there. Then how do I respond to this, right? Test a different ad, test different copy. I've seen ads that I think are like, we'll try to get it to work. And they end up becoming one of the top performing ads for a long time. And we scale off of those ads that aren't exactly like ideal. They aren't exactly really pretty looking ads, but they work. And at the end of the day, you want to look at your data. When things aren't working, depending on where it's not working, you'll be able to see if the ads aren't getting enough interest. Maybe it's the click-through rate's low, maybe the clicks are low, then it's the ad, or the targeting could be off. But usually you want to split test different ads, you want to split test different audiences if things aren't working early in your funnel, if things aren't working in the middle, when people are clicking into your ads, they're looking at your landing page, maybe they're clicking invest now. Um, just if you're not getting enough on that landing page, you want to look to your landing page and make some edits there, making sure that the page is optimized, your top points or near the top fold of your page. And then if things aren't working, later on in the funnel, you want to look to optimize things later on in the funnel as well.
Awesome. Yeah, I think this might go back in reference to the past slide, but capitalizing on trends and really looking at what your competitors are doing. I mean, success leaves clues, right? So if you kind of see what trends are working, what is driving traffic to your page, you definitely want to mimic that. If you see maybe a competitor and you did your competitor marketing audit and you see, wow, this ad that they're running seems to be, maybe that's their main traffic source, and you see what that ad is, and maybe you can replicate it for your own offering, or we would replicate it for your offering to then draw that traffic in. So definitely want to keep your pulse on trends, what's happening in the world around you in marketing in general, and just make that parallel to your campaign.
Now, responding to market shifts and trends, we want to pivot for progress. As Nikki was saying, variant tests, ABs of different creatives, audiences, budgets. As a marketer, should be able to reference campaigns across a spectrum of different verticals, products, budgets, timelines. We're given the last few days, last 2 weeks of a campaign at times, 1 month, as Jeanette was mentioning. In other cases, it's no, we need this to run and scale. We're going to raise 75 million. We can't do it overnight, probably the full 12 months. So how is it going to stack to get there? Scale up in successful strategies and pivot away from underperformers. So it says it on every page of our deck here. It's the name of my podcast, Test, Optimize, Scale. It's our philosophy towards marketing, entrepreneurship, overall growth. And it's very true for media buying, which is consistent approach towards traffic. We're going to test different audiences, creatives, funnels. We're going to optimize towards what's working best, look for opportunities to scale. When those stop working, scale up others. You don't want to have your hands tied to one creative. You always want to be looking at the next. Avoiding marketing pitfalls, common mistakes to steer clear of. Nikki, have you seen mistakes when it comes to advertising?
I absolutely have. A lot of people, when it comes to Facebook advertising, are very impatient. You know, when things aren't working, it's not because Facebook ads don't work. It's not because nobody wants to invest into your campaign. It's because you have yet to find the correct creative and the target audience to match with that total like ad set. So, but again, it all comes down to testing different things, looking for different audiences, creative ways to target your audience. Sometimes if you're, let's say, targeting an audience who maybe likes engineering, let's say, for example, maybe they're also interested in other things that you want to target. Maybe they're interested in a certain book, right? That's something maybe you can try different to target on Facebook as well. A lot of your targeting is not always straightforward. You want to find different angles to reach your audiences, more creatives, maybe self videos, things that are more native to platform. I find that humor works a lot in creatives, whether it's investor marketing or it's just e-commerce marketing. Humor always resonates with people. If you make someone laugh, they're going to be interested. They're going to click. Different types of funnels. If you want to try different landing pages, that's always good to test. More traffic, more publishers as well. So it just comes down to testing these different things and always be testing and scaling where things are working. And another common mistake I see is that people are running the same ad for a long time, and eventually it doesn't work anymore because ads do have a life cycle. So if you're running that same ad, yes, it works maybe for like a month, maybe 2 months. It's like very good, but they haven't been testing different ads. They're just running with that same ad. And once that ads start to die out, you're gonna be kind of dead. Your campaign's gonna slow down. So that's why I always say, even if you're scaling, you want to be testing different ads. You want to be continue testing so that once that ad dies down, you already have ads that are ready to scale up so that you're not stopping anywhere. You're going to continue to keep pushing.
Love this meme, by the way.
That's awesome. Yeah, I think to add on to that, always be testing, even when you do have that top performing ad that is just consistent. Take that ad and maybe that messaging is working, but maybe try a new creative. Switch up the graphic, but keep that messaging. And then, like Nikki's saying, maybe if it dies out, you still have this same messaging, but different graphics and stuff that you can keep in the pipeline for retargeting to keep it fresh. So definitely agree with that.
That is a fact. And we audit campaigns beyond just ours. And when we see them get slower and what they're running on Facebook, again, they're required to show all live ads from a given page. It's often the same ads where they stopped running. If you're not planning on spending on marketing, if you're not advertising, how are you going to introduce investors to your raise? Don't rely directly on the platforms to bring you all the traffic you need. I'll see it at some some conversations for the self-publishing tools. Like, oh, we're listing on this platform. We should be fine. We got our audit done. Even if your email lists are substantial, don't skimp on your marketing. You are trying to raise a relatively large amount of money here. You do not want failure for future fundraising conversations. You don't want that brought up. So throw everything you can at it, get traffic there, work with groups who have databases of historical equity crowdfunding investors. If you look at the charts that are being published for the space, VC capital fundraising has gone down and equity crowdfunding has stabilized for the year, and looking at percentages gone up. This is something that the top VC funds talk to us about and have traffic or exploring traffic channels to get live towards their offerings. The world is changing. We are becoming more and more digital every day. And if you picture where fundraising will be in 2033, in 2043, not that far away. 2003 doesn't feel like that long ago. That's the distance to 2043. We're not going backwards. Unless a catastrophic event occurs, we're going to be living more and more and more online. And that allows for scale. Advertising we use for scale. If we didn't have to buy traffic, that would be great. But there's a consistency element to this. A lot of the financial email newsletters get a bit stagnant after a while, get shut down for whatever reason. Advertising stays consistent. That's how these top media companies stay in business. There's a reason. It's because, as Nikki said, you're buying traffic. If your campaign's not working, it doesn't mean these platforms don't work. It means you have to change something up about your funnel. So navigating the stormy waters, heading challenges and setbacks. Jeanette, how do you deal with unforeseen obstacles?
Unforeseen obstacles, you just got to go head first. You have to understand what you're working with, and then, really analyzing where you want to go and where you've come from, right? So looking at those metrics, I know at the projection slide, there are all these CPM, CPAs, CPCs, cost per click, cost per, 1,000 impressions. Even though, those aren't necessarily those conversions you want to see, they're still very important to analyze. Okay, this ad, is doing this, or you're getting so many impressions for $25, $15. So, these are definitely things that you can lean into. So just staying afloat on, what has worked, and maybe coming together with a new strategy of messaging and creative, so just looking at the bigger picture and, just not stopping, regrouping, finding your strong suit and pushing that out.
Absolutely agree with that. And just want to add some quick thing here. Always trust the process. If you're running ads, you're building out a retargeting pool, and I'm pretty confident when I say that. If you run ads correctly, you build out a retargeting pool, you've spent a good enough money, good enough budget to build that. When you're closing, 95% of campaigns see a positive return, and campaigns that I close with that have stuck with us, that have run ads all the way through, see at least like a 5x return on ad spend in their final 2 weeks. So it's just a lot of audience building, staying persistent, and making sure that your audience knows that you're closing and that the opportunity is gonna be gone soon.
And it's tough to count on that last period. There are events in the world that could affect it. How much did EarthGrid do in their last month, Jeanette?
I want to say well over $1 million in their last month.
Upwards of 1.5 and 3.3 million raised there, 3.75% click-through rate, closer to that dollar cost per click. They had some larger investments, and so the link clicks at 55,000 just from ads, I may add, and a 25x return on ad spend is huge. Definitely recommend you checking out their campaign on Net Capital. Nikki, anything to add to this one?
Yeah, I mean, these guys, in the middle of the campaign were actually stuck, but they, went with it. They were persistent. They continue to run ads. They didn't say, "Oh, we want to pause ads. Things aren't working." Right? They were stuck, but they continue to do it. I think month like 3, 4 maybe, they were stuck. But like I said, continue to push through, continue to test different things, and most importantly, we've built out that retargeting pool, so that when they did close, they had, I think, over 20,000 people in their campaign to market to. And usually when you close, you have a very high conversion rate. And if we had 20,000 people in that retargeting pool and just a small percentage of people converted, we still have a very good return.
And as Nikki mentioned, if they stopped, it would have been drastically lower than this, but potentially under $1 million. Troy is an amazing CEO, has been on the podcast before, gets investments from various different types of groups and published, and makes our job easy in many respects. Similar with Avadain, with Brad Larson, King's Crowd pitch winner, may I add, and showing the average daily raise, showing upwards of 8x return on ad spend. This is actually a case study that is now outdated, as they're well over 2.5 million now, and seeing even stronger performance metrics, with advertising being a primary driver of the campaign. Jeanette, you want to give some notes on Adam Beam's ad campaign?
Yeah, Adam Beam, we're gearing up for another one. Goes live tomorrow. But yeah, yeah. I'm sorry, what'd you say?
Is it as announced? Yes.
As announced, yes. But yes, worked with Adam Beam, and this is one of those campaigns where we were stuck in the middle, months 3 and 4, they were like, we're not getting investments, maybe we should stop. But Charles, he's a great CEO as well, and he weathered the storm. We tried new creatives. As you can see here, he's open to doing those selfie videos and really, having a presence with his company. So yeah, and as Nikki was saying, that retargeting pool is key. Towards the end of the campaign, we saw a spike in numbers, people who may have been watching it for 6-7 months. When they saw, hey, the time's coming to a close, they really hopped in, and we saw a lot of momentum there. So
Yeah, and this is another one of those campaigns, just real quickly, that was kind of stalled in the middle. And at one point, Charles was like, yeah, I'd be happy to raise like 1 million, right? But it was stuck in the middle, and we completely blew it out of the water. And just one more thing, quick thing to point out by these creatives, it's a lot of social proof. Partnership with Intel. The second one, you have partnership with US Air Force. Things like this drive momentum. They drive a lot of traffic, and most importantly, they'll drive investors.
Awesome. So, the closing message of the importance of continuous improvement. Embrace the growth curve. It is a constant. Capitalize on the improvements in front-end metrics. Success is a journey, not an endpoint. If you look at the top brands marketing to investors today, the banks, the funds, the top brands as a whole. I'm traveling. I'm in Atlanta today. I'm looking at a Coca-Cola sign out the window. Ups and downs across any of these, the biggest brands, you are no different. You need to plan for this. You need to shift with it. But if you do so, you can be top 10%, a top 10 campaign, at least have a higher likelihood of getting there. Reach out to us. We're happy to take your questions anytime. We are open book in terms of what we see working in the market and what we do not. Want to thank everybody for tuning in. Jeanette, Nikki, awesome jobs today, true thought leaders. And as I'm signing off here, we will see you all next time for next month's webinar.
all right, sounds good. Thank you.
Awesome.
Thanks, everyone. Take care.